Good morning. This is Mike Wade, and welcome to the High Probability Short-Term Credit Spread Show. On behalf of Brandon, who's on vacation for a couple of weeks, it's just me for the next 1 or 2 weeks, I think. So we got a lot going on today. We're going to talk about the markets. The CPI came out this morning. I want to talk about that. I want to take a look at last week's trade on American Eagle Outfitters. I'm going to get my sniper guidebook away for free. You're going to need that book if you want to follow me on Thursday mornings. We are just ringing the bell on our trades. We've had a series of really great winners over the last couple of months. And then we're going to look at current live trade for today. And there's a couple out there I like. We might go after two today. And if you have any stocks you'd like me to look at, please pop them down below in the chat box. And my brother Ryan will bring those in towards the end of the show. And then that's about it for today. So that's a lot. So let's get started. First thing I want to do is take a look at a chart of the S&P 500. Anybody want to go out on a limb and say we're still in a bullish trend? I'll go out on a limb. We are in a bullish trend. You don't need a market pundit or an expert to tell you where the markets are going. We're going up. Now, one of the things that I find really interesting about the market over the last 2 days or so was, remember, now let's set the stage. We have a high inflationary environment in the US. Yes, inflation's coming down. And the Fed has said they're not going to lift rates anymore. And we're going to cut rates at some point. And the markets are pining for these rate cuts. And then during that pining for rate cuts, any news that suggested that the Fed was going to cut interest rates later than sooner dropped the market, and vice versa. All right. So we had all this skittishness, like a cat chasing a laser pointer, I've mentioned in the past. And then what the behavior has changed. So this is really good news for the bulls. So on this day here, right above my crosshair, the consumer price index came in hotter than expected, meaning inflation is kind of ticking up. And the markets came down. This is the day here. The markets came down on the news and then bounced. In other words, they shook it off. Markets, for the first time over the last few months or so, took an indication that the Fed may cut rates later and shook it off. Now, what's interesting this morning is, if you take a look at this graphic, we had what's called the PPI, the Producer Price Index, came in, and it was at 0.6%, and the markets were expecting 0.3%. Now, normally what used to happen on news like that, suggesting the Fed's going to wait longer to cut rates, is that the markets have been dropping. But today they shook it off. In fact, you can see the impact of that announcement, which came out at 8:30 this morning. And this is a pre-market and post-market. The post-market from last night is this gray area, and then the light blue area is this morning. All right. So what happened yesterday is that the SPY, this is the SPYs, the ETF that tracks the S&P 500. The S&P 500 closed at 5,016 or so, and then post-market dribbled up a little bit, and then pre-market this morning it gaps up. All right, it gaps up, and then tick, 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 everything's fine, and then this CPI report comes out right here. You can see it. All of a sudden at 8:30 Eastern time, the CPI report came out hot. It's more expensive for wholesalers and producers to produce products, and the markets have come down a little bit, but we're still up from yesterday. All right, so that's the impact right here of the hot inflationary report, and we've come down a little bit, but not so much. So what I like about that is, even in the face of what was in the past bad news, the markets are running higher. All right, so solid bullish prognosis on the market. All right, now if you're a stock trader, look for stocks that are setting new highs as well. This is an all-time high. Right yesterday was an all-time high close. We've had a higher high this morning, and I would say probably by the end of the day, we'll notch up higher. I see resistance up here at 520, which translates to 5,200 on the SPX, and I see support right here at 510, which translates to 5,000 100 on the S&P 500 itself. So we're bullish. That's what it is. We're bullish. The markets are bullish. No reason to suspect we're going to see any sizable correction. Yes, we'll get some pullbacks. That's what trends do. We have a rush and then we come down and we go higher and down and higher. But higher lows and higher highs is the definition of a bullish trend, and we are certainly in one. All right, so bullish. Awesome. Now, we had a trade last week on, let me pull up this chart for you. I'm using the Hub software, really good charting package. I really like it a lot. But this is what we did last week. All right, American Eagle Outfitters came out and blew out their earnings, just blew them out. The stock opened up here when the show started. American Eagle was right up here. And we put an order in to make money on this stock that had set multi-year highs on really good news, raise your future guidance. All is well. The birds are singing, rainbows, sunshine. Everything was great. And then profit taking ensued. All right, so we placed this order here. I'll show the trade here in a minute. We placed an order to make money anywhere above 22. And when the stock was up there, that seemed like a really high probability of profit. Now, we did 2 trades last week. We put orders in for 2 trades last week. One was on American Eagle, this one, and another was on Victoria's Secret. I'm not going to cover that one. It didn't get filled. But this order was not filled in the morning when we placed the show. It was filled after the stock came down. All right. So we fished. We're going to fish again this morning, I suspect, based on the pricing that I see on the 2 trades I'd like to cover with you this morning. So the rules of this trade are you don't do anything unless the stock closes below this line in the sand at 22. All right. And you can see here that it bounced right off of 22. So the importance of these lines in the sand, what are they? Support and resistance levels. That's all they are. And we put our support level, our line in the sand, at a beautiful spot. 22 was a support and a resistance level over time. And then the stock came down and bounced off of it. So where are we today on American Eagle Outfitters? Let me show you. This is the trade, the actual trade that we posted last week. We sold a credit spread. What's a credit spread? Get the guide. I'm going to talk about credit spreads a lot on this show, and there's a free guide I'll talk about here in just a minute. So what we did was we sold a March 22 put on the stock AEO, and then we bought the underlying 21 put. We sold the 22 for 17 cents. We bought the 21 for 7 cents. That's a 10-cent net debit. All right, so we had 10 cents of credit, and we did this 5 times to generate $50 of maximum profit with a risk of $450. Now, you might be saying to yourself, man, is that worth it? Is it worth risking $450 to make 50? Yes. It might not look like it, but yes. This system is, if you've ever seen the movie Moneyball, that's really what this system is. In Moneyball, they picked up baseball players that walked a lot, that got on base. So this system is about getting on base, getting on base, getting on base, scoring runs, getting on base. Maybe you get struck out once out of every 10 times you're up to bat. It's kind of like that. And the outcome of this system over almost 2 years now of me broadcasting this system that I developed is an average win rate of 90% and an average profit with losers baked into the average of 10% every 7 to 8 days. Now think about that. And if you took some money and you put it in a trade and you made 10% in a week, you could use that same money 3 more times during the month and generate 40%. Have you ever made 40% consistently month by month in your life? Most traders would say no. Some maybe, but most would say no. So I just wanted to say that and amplify that because, yeah, it's not a lot of money. It isn't, but it stacks up very fast. just imagine that you only got 10% a month for a year. That's 120% over a year. And put in compounding and it just gets crazy. All right, now, so what's happened since we got in? This is the day we got in, and this is what I call a risk graph. I'm using another piece of software called Tom's Tools. I live in this software. I like to see pictures of my trade. So in this particular case, by selling this credit spread, this is the picture. And what you can see here is profit on the right side, risk on the left side. All right, so visually, I can get an idea of how I'm doing. So we put an order in for 10 cents up here. It didn't fill. As the stock came down, it did fill. And we were in this position by the end of the day, we were down a little bit. Now, the rules are really critical here. The rules are if the stock closes less than your short put, 22, then you're out. Now, I wanted to amplify this example because if you're trading this system, you've got to be ready to take a little heat in the event the stock drops down to your short put in this case. You can see here, it's getting a little hot. There's 22. There's a bounce off 22. At this stage, we're down about 130 bucks or so. Yeah, exactly $130. But you got to hold. You want to hold. The next day we held, following the rules. The stock bounced right again off of the 22 level there. It bounced again. Good. 22 is holding so far. Another day. Bounce it forward one more day to 312. We get another bounce on 312. There's another one. Bounce, bounce, bounce. And then yesterday, the stock bounced again. And now we are in close to profit. The stock has successfully tested the 22 level. It's now bouncing. We have 9 days left in the trade. This one looks destined to be a winner. And we survived by having rules. Okay? So trading, if you want to be successful at trading, and if you're here, you do, right? You got to follow rules. And the most important rule is risk management. When do you take a loss? So what I do in my trading life is I manage risk and let the winners take care of themselves. All right. So this rule of exiting when the stock closes on the wrong side of your short strike are critical. And don't even think about anything else. Yes, we were down quite a bit here. We waited for the rule to kick in. It never kicked in. And we were able to, and if you adopt this rule, you can move through the times when it gets a little hot and just follow the rules. It's really good for your psychology, and really recommend that you really embrace these rules. And the rules, by the way, are, I would say, beautifully, because I wrote this guide, are beautifully illustrated in the Sniper's Guidebook that I put together. It's a simple document. It takes you through the 5 steps that I cover here every Thursday. It talks about a credit spread. What is a credit spread? It talks about these risk graphs. It talks about how to find these trades, how to draw your lines in the sand, and then and most importantly, how to manage the trades. And now I've been doing this for a long time. I have a community of people that I coach, and we had a challenge in January with our guidebook, and 90% of our people, and these are the ones that actually follow the rules, made money. Again, the system is so rote. If you follow the rules, history would dictate and strongly suggest that you as well could generate an average of 10% every 7 days in your own accounts. That's what I want. That's why I started this company that I'm in, Michael Wade Trade Coaching, and we wrap around community around people, and we give them an environment in which they can thrive as traders. And this is one of the things that we do. And really, that's what I want the rest of my life. I'm successfully trading, and I want others to be able to do it as well. All right, I just heard that bell, Ryan. I think the markets have just opened. I know they have. I'm like Pavlov's dog. When I hear that bell, I get excited. I salivate a little bit. All right. Now, here is the stock that I'm interested in. And the first one, there's two of them I want to talk about. The first is Dick's Sporting Goods. All right. Guess what they do? Well, they sell sporting goods in the United States. They blew out their sales in Q4 and see continued revenue growth for the rest of the year. And they also hiked their dividend by 10%. What? Yeah, that's really good news. Let's take a look at a chart of Dick's. DKS is the symbol. Good God, look at that gap there. It's gapped above 210. All right, now after the gap, so this is where it closed yesterday, and then now the stock is above 210. So the question becomes, where do I draw my line in the sand? All right, now already pre-earnings, let's walk into this a little bit. Now, obviously, if I could sell a credit spread down here at this blue line, which is the 200-day moving average, and get some money for it, I would do it. Because the probability of the stock dropping down to the 200-day average is virtually zero. And with that, you're not going to get any money. So the trick is, how close do we get and still make some money? How much money? I'm going to say about 10%. I want to grab 10% as far away from the heat as I can get it. So where I'd like to sell is down here at 180. All right. Why? Well, 180, let's zoom in a little bit here. Dick's has taken off. I might go up to 190 now. I'm seeing Dick's really take a run here. All right, so here's the 180 level. And why do I like it? Well, I call it a line in the sand, but what it is a support level. And look at the top of my crosshairs there. That was a level that was broken on this day. That became support. The stock closed right at just below support. Bounced. And so the idea is that if it's already bounced several times above 180 or right off 180, and is it likely to now to drop below 180 after this exceptional earnings announcement? I really doubt it. So that's where I'd like to sell. The question becomes, is there enough money there? All right, so here's what I'm going to do now. I will pop into this thing called Thinkorswim. I'm in a simulated trading platform, and I'm just trying to look here to see if I can get anything. I'm going to use 14-day options. That's right in the guidebook. Use 14-day options, sometimes less if you can get some credit. And then this is the order I'd like. Selling March 24 or March 28, 180 put. Buying the next one underneath, which is the 177.50 put. And I can already see here that they're not putting any money into that credit spread at the moment. Now, that could actually, over time, this morning, it will turn into a small credit. I don't know how much, though. So this is another little technique that I want to cover with you, and it's exactly what we did last week on American Eagle Outfitters, is that we just put this order in. We take 10% of the spread width. 180 minus 177.50 is $2.50. 10% of $2.50 is 25 cents. All right. Can I get 25 cents right now? No, not going to happen. The only way I'll get filled on this is if Dick's Sporting Goods starts to drop towards 180. Now I'm going to pop back over and see what it's doing in the Hub charting software. It looks like it wants to hold above 210 4 minutes into the market. And so now the question becomes, well, remember what happened with American Eagle? Just quickly, let me just show you. American Eagle was up here, the first 10, 15 minutes of the market, and then later came down. American Eagle also had blowout earnings, just like Dick's. So yeah, it looks like, now here's what's different about this one. It's above 210. 210 seems to be holding. My alarm's going off. Give me a sec here. 210 seems to be holding. So now what I might consider, and I am going to consider, is lifting my line in the sand to 190. Now, why am I considering that? Well, the stock is finding support at 210. So I think it could drop, but it's showing it's trying to reach to higher heights. So what I'll do then is lift my line in the sand up to 190. All right, so I'm going to do that live. I'm going to change my upper strike to 190 and then make my lower strike 187.50. And there's no credit there either, but I'm going to place the order as 2 cents credit. We may not get filled on this, and that's okay because there's plenty of other trades. I'm going to allow this trade to come to me. I'm not going to go chasing this thing. I'm not going to go any higher than this. You could. And by the way, this is an all-time high on Dick's Sporting Goods, so there's no history back over here. So I just want to stay as far away as I can, and I'm just not willing to go any farther up. You could, if you did, 200 would be the very closest you should get. No closer than 200, but I like to snipe as safely as possible, so I'm going to keep that in at 190. So here's the order then. And I'll summarize this in a second. We're going to sell the DKS 190 put for March 28, buy the 187.50 put underneath. I want 25 cents. The mid price is 17. Now it's getting up. It's getting closer. Now the mid price is 20 cents. I'll confirm and send that. And I'm going to be patient. I'm not going to feel patient. I'm going to act like I'm patient. I'd like to get filled on this. And we're in the ballpark. So we'll let that sit and we'll let the trade come to us. So this is how you also maximize your probability of profit. So let me put this in a sheet here so you can see exactly what I just did. Okay. So we sold the 290 put and we bought the 287.50 put. I can type here, that would be good. And I'm asking 25 cents. So Dick's Sporting Goods, sell to open the DKS March 28, 290 put, and buy to open, same stock, same expiration, 287.50 put, and your net credit limit is 25 cents. You're not going to get filled right now, but if Dick's, as it moves around this morning, all we needed to do is drop a little bit and we'll get our 25 cents. Now, let me show you some calculations on this. Now, all of this is in the guidebook, y'all. So you can go right to the guidebook. There'll be a link below. There is a link below. Just grab it, download it. It's free, and you can trade alongside me, simulate it. Not suggesting you trade real money, but you can go alongside with me, study the guidebook, and be prepared to trade live with me on Thursday mornings. That's the idea. So there's some calculations that will help you understand the P&L picture of this trade. So we're concerned about max risk and max ROI. Max risk is determined by taking the width of the spread. And remember, this is we just got filled, awesome. This is a 2.5 point spread, 190 minus 287.50. So it's a 2.5 point spread. If we get 25 cents, then our max risk in the trade is the width of the spread minus the credit. And that's right up here as well, right? So our max risk in this trade now is 225. And if you divide the credit by the maximum risk, the potential return on investment is 11%. In other words, 25 cents divided by $2.25 is 11%. All right, so this, if filled, will give you a really, really high probability chance to make 10% after you buy it back for 10% of the original credit. Okay, now position sizing, I haven't talked about in a while. Position sizing is also important. All right, you want to risk no more than 2 to 3% of your total portfolio value in any given trade. That's it. All right, so I'm going to just size that at, I'm going to say for the sake of example, that's $500 of risk. That's 2% of my portfolio. That's all I want to put at risk because things happen. The stock could tank. I back up the truck and put half my portfolio in a trade. and I lose all of it, that's not a good thing. I know somebody that did that back in 1998 to 2000. This guy. So I know. I'm very religious about this. It's really important. So if I wanted to risk no more than 500, what I could do here with max risk being considered is do 2 contracts. So if I did 2 contracts here, my max risk would be $445 if filled at 25 cents. All right, so that's really important as well. The most important thing is, in the event the stock does not go your way, our way, and the stock closes less than the short put at 290, close it up, take it off, don't even think twice. Take it off, move on, rock and fire, keep it going. We lose about 1 out of every 10 with this strategy. So most important, manage your risk. And the second rule is to, as soon as you can, buy the spread back for 10% of your original credit. In this case, that would be 2.5 cents, rounded up to 3. You want to buy this back 3 cents for 3 cents, good till cancel. All right, now with that said, let's see if we got filled on that. I think we did. No, we're not quite there yet. Probably not going to happen unless the stock drops. I got filled on something else I'm trading there in a simulated platform. All right, so that one's not going to fill, it looks like, but there's others. I know we're running out of time here, so I'm just going to tell you what the trade is. And it's on Robinhood. You've heard of Robinhood. By the way, Bitcoin is setting all-time highs. Robinhood is a retail broker. They also, for stocks, options, as well as cryptocurrencies. And that particular company had a really good earnings announcement. Their trading volume grew by 10% month on month to $6.5 billion. So here's another that I like. And I'm going to do this one since it doesn't look like Dix is going to fill for us. I like the 16 puts here. All right, so this is Robinhood. They announced that great trading volume number. Their revenues are going to increase as a consequence. I like 16 on this one, maybe 17. Let's go in and take a quick look on Robinhood. And I just want to check the prices. Let's see what they're given. HOOD. And I want 14-day options. And I'd like to sell at 16. We might be able to get something here. 16, 15. Yeah, let's do this one. All right, I'm going to put this order in for 10 cents. And on Robinhood, and I'll come back and give you the what's so on this. We're going to sell the March 28, 16 put by the 15. Mid price is 9 cents. I'm going to confirm and send that one, and that one will sit there. Good chance of a fill on that. We're at 9.5 cents mid price, and we're asking 10. So anyway, I think this is going to fill. Quite likely will fill, and this trade will give us a 10% profit over the next couple of weeks, probably sooner, by selling the 16 and buying the 15 put. So what does this trade look like? Let me show you. Robinhood is the symbol. Hood is the symbol. I want to sell the 16 put, and I want to buy the 15 put underneath, and I want at least 10 cents. I'm asking for it. And then you want to exit this trade if the stock closes less than 16. It's a system, y'all. It's a system that I've taught many novice traders to trade. In January, I saw very distinct evidence that if you follow these rules, you should do well. No guarantee. Trading is like predicting the future. You never know. So, Ryan, I know we have people watching and they want to look at some stocks. If we have any stocks, I can take a quick look and give you some lines in the sand on whatever stocks are coming through the chat box.
Yeah, I have HEAR.
I can't hear you. What? HEAR. Turtle Beach Corp. Let's pull that up and see. Now, what I need. Whoa. Wow. Ryan, there's some good news there, but I don't know what it is, so I'm going to go find out. But this stock is way, way up here. What do they do? I don't even know what they do.
They
I've never
they
heard of it.
actually make really nice like gaming headsets.
Oh, really?
Yeah.
We know how people like gaming. Let's see here. So what I've done here is I'm going to Yahoo Finance, finance.yahoo.com. I typed in the symbol here. Turtle Beach is the name of the company. And I'm just going to look through here. Mixed 2023 financial results amidst market challenges. So already I don't like it. I don't want any mixed financial results. I want, we blew out our guidance, our sales is increasing, and our future guidance has been lifted. That's what I want to hear. Now, there might be some really compelling technical things on the chart, and indeed there are. Yeah, but that news is mixed. And when I see that kind of news, there's more chance that the stock could drift down. So if I did anything, I wouldn't do anything on this, but if I did, I wouldn't go any higher than 12, but really 11. Give this stock room to come back down because the news was mixed. Probability, technical probability, earnings is, there's no question that earnings are great or revenues are great, or a pharmaceutical company announces that the FDA approves one of their drugs. Really positive news or really negative news. And if you really are disciplined about that, you can really start generating 10% every week on your money. And that's if history repeats, of course. And I'm just checking. It looks like we got filled. Yeah, we got Robinhood, y'all. We got Robinhood. We got it for 10 cents. See how patient I was? Robinhood has come down. We now own a trade on Robinhood. Let me show you the stock chart again. Let's go back to Robinhood. And we now make money on Robinhood as long as it stays below 16, above 16. Yesterday it was above 17, and this news is awesome for Robinhood. More money for Robinhood, more revenue, more traders placing trades. So why would it come back to where it was yesterday? So I just want you to feel and taste that probability. Yes, Robinhood has come down a little bit. Could it drop further? Yeah. If it does, it should stop at 17. But if it breaks 17, it's going to have to really, there has to be some new news to come out, I think, to drop it below 16. So that's not in the bag, but in my experience, pretty close. So Ryan, I went a little long today, only by 3 minutes. That's pretty good. So everybody, I hope you enjoyed the show. We do it every Thursday at 9:15 Eastern Time. Get the guidebook. If you like the channel, please consider subscribing to the channel. Read the guidebook and be ready next week. Earnings season is coming in about 3-4 weeks. We'll start seeing a lot more trades. So a good time for you to grab that guidebook, get yourself ready, and come play with me every Thursday at 9:15. Have a great week, everybody. We'll see you soon.